Hello everyone, this is Juan Sarmiento and today is Friday, May the 26th. Let's go quickly through our current positions, make any changes necessary, and then we'll go and examine 4 stocks that I have chosen for examination. I have not looked at them, I just wanted to make the entire revision with you. So let's start with AXP, and this is the famous cover call, and we have this June 50. What do we need to look at when we look at this, guys? Always look at the extrinsic value. Okay, so look at the June 14 days to expiration, so the extrinsic value will remain there until 1 or 2 days to expiration at the most, which means you won't get assigned. There's $120 there sitting waiting to erode. So nobody will be stupid to exercise their option when they have so much extrinsic value. So you don't need to worry about it unless this goes negative, okay, or close to 0. But even then, it's unlikely to get assigned. But if it gets assigned, the worst that could happen is your 100 shares are taken away. No big deal. So let's leave those there as we go and examine the cover call strategy a little further. We have 40 calls which expire in June, and it looks like the stock is moving, AXP is moving finally to the upside. Could we get lucky as to it go to 180? Not likely, but right now it's nothing but a lottery ticket, these 4 calls here. And you can see that the cover call is essentially generates money for us. When you sell a call at $685, that's not bad. Okay, that's enough to give you an income. You know, a few of these may give you a good income for you in retirement, or at least assist you with your money. Okay, let's go to ISRG. Okay, in this case we have this put expiring today. Okay, so that's gonna go completely blank. Okay, so what do? Well, we can sell a put. We can sell a put, or 2 in fact, at the same strike price, all right, if it generates money on June 23rd. This one, it would expire. It's inevitable. Okay, nothing that dramatic will happen as to stock to go down to below 295 before the end of the day. So let's analyze closing. This is just so that I can get here my 2 calls, puts that I'm going to sell, puts at the same. I just wanted to get the expiration date, and instead of call is a put. Wow, I'm getting $4 from it, which is $400 times 2, $800 to do this. Well, right now increased by 10 cents, which means $20 for me. Not bad, okay? So I want to do that. Why not? And even when it gets filled, there it is. It would look again like a Gini trade. I simply deselect this put that is going to expire, and it looks exactly like any other trade. Okay, good. Let's move on to Oracle. Oracle has been moving nicely. And here, it's moved over my smiley face, which means I could sell calls. And I have been selling calls, but right now it's $63 delta. Okay, I could sell one more here. The stock is trading at 104. You can roll it up. You can roll up 3. You have 3 outstanding calls. What do I mean by that? We have 8 long calls, 3 short calls. The difference is 3 outstanding calls. You can roll them all up, analyze rolling, and instead of 8 we say 3. We are going to close the August 90 calls, and we're going to buy the higher strike price, which could be 105 now, and the expiration should be the same. So let's put the price, the strike price 105, and the expiration here August and then that gives us $1,102. And you can see how my delta, my line here, my slice is now moved below the smiley face. Okay, so you can do this, definitely do this, but it becomes negative, delta negative. I don't know if I want that with this stock moving so strongly. Take a look at the chart. Yeah, that went up really high today and then down. Well, perhaps this is the time to do that. Or we can simply sell one. What if I sell one? Analyze closing. Because I have three, one of the three leaves me two, and here again it becomes delta negative, but not by much. Okay, so then you can decide what you want to do. Okay. You can even, let's say I want to sell this call, and gives me negative delta. What if I want positive delta, or at least neutral? In this case, is higher. What if I did only one or two? Yeah, if I do two roll ups, I get a neutral delta, which is good, because if the stock keeps going up, great. If it goes down, great as well. I think one would even work, because then I have 32. I'm gonna do the two, so I neutralize my deltas. That's only your choice, depends how you feel. Sometimes you just feel like you can't do anything right. Well, this is one thing to do, okay? Get some money out of it. And yet, you would still leave one outstanding call at 90 strike price. Okay, we'll see if it gets filled. Okay, let's go to the stocks that I'm looking at in alphabetical order. Let's start with AMAT. Okay, and here we go. Let's look at the chart. Okay, it's moving very strongly after earnings. They beat expectations by a wide margin. Okay, more than 10% definitely. Okay, the volatility is relatively low. Historically speaking, you can see the green light, the green line. It means, okay, we can do that, because compared to the historical volatility, this stock is now at the lower end. If you want to confirm that, go to the trade tab and scroll down. Make sure you're in AMAT, and you'll see here that the current IV percentile is 13. If it is 15, that's great. Okay, all right. So let's generate the trade. Go to the trade tab, and if you have followed me, you should be able to create a trade here. What should be my strike price? Well, 135, because the stock is very, very close to 135. So I click here, right click, and say buy custom. And if you have followed me for years now, you should be able to get the Genie trade template. And let's say analyze trade. Okay, there it is. Okay, let's delete the old one. Okay, this is my trade here. How many days to expiration? Well, on the long side, on the short side, first of all, the July the 7th, that's 42 days. No, I want something between 35 and 28 days to expiration. So let's put this to June 30th. June 30th. All right, and that's good. But now I notice here that my long has a 41 on the call side. Long call has a 41 implied volatility. That's just not good. It's too expensive. Okay, we want to buy cheap options and sell expensive options. So this is actually not going to work for us. Okay, it may change. Or you can try a different strike price. What if we go down to 30? 130. Well, no, that's even worse. What if we go, yeah, you can't really go to any other strike price. The August is 84 days. I need to be more than 90 days to expiration. And the October is, forget it, 142, way too much. So, okay, we rule out AMAT. Let's go to ANET. Okay, Arista Networks, and let's look at they beat expectations. Incredibly, the stock went down, but now it's going up very nicely and probably going to a new high. But I see now that my line here is red, means that the volatility has now intraday increased enough to rule out my stock. Let's see, if we go to the trade tab here, let's just do it anyway to confirm. We go to September, and what strike price? Well, 170 is the closest thing. By custom, Gini, analyze trade. Okay? And you can see that it's 44 here. If you want to create this trade and you don't have the template, you can create it by looking at the strike price, the expiration here in September, and click here on the options that you want here. Let's say 170, right click and say buy straddle, and you can do 2 of those. That's my straddle, and then my short should be about 28. Let's do the 28 days and scroll down, same expiration, same strike price, different expiration. Press the control key, and now we're going to click on the bid. Oops, that's not what I wanted. I click here and say analyze sell. Keep your control key pressed, strangle, and there it is. That's your Gini trade. Look at how it looks like. Oh, the price here is wrong. Let's put it 170. Great. Okay, so we see that it's wrong. The implied volatility is too high. But now I can sell. I can create this, create duplicate, and then click here. That's a floppy disk in a file. Okay, this is how you save your custom. You can call it Gini, you can call it whatever you want, right? Let's call it something like this. Save it, and then next time you go to the trade tab, click over here in the same and say buy custom, and then you say one's favorite trade, and there it is. Okay, then you say analyze. It should be the exact same trade coming back again. Okay, again, because the implied volatility is too high, we decide not to go for it. Let's do PA Networks, Palo Alto Networks. Okay, here we have a potential trade, and this is more promising. You can see that 37, well, let's go through the process here. First, the earnings, they beat expectations by a very big margin. Okay, so that's good. Go to the, look at the chart, the green line, that's important, and the volatility is at the lower end, which means that the percent implied, the current IV percentile is less than 15, in fact it's 7, so that's good. All right, what else? We need other things to figure out. Let's go to our implied volatility and calculate the average of the long versus the short, and that should be about 3% maximum. So let's go to the calculator. Let's clear the calculator here. And I go, note that I'm using this implied volatility here at the bottom right corner of your screen. 37.78 plus 30.6 divided by 2 equals 34. Save that in memory. And then let's clear and then do the same for the short. 34.44 plus 30.11 divided by 2, and that's 32.75. We simply subtract it from the number we have in memory and then recall it, and it's less than 3%. That means it's acceptable. Okay, I like. So far so good. Every item is working out. My price has been coming down a little since we start talking. So now create duplicate order and see your mid versus natural. Okay, you subtract this separation, these two numbers. Again, let's go to calculator. Oops, sorry, remove the calculator. Let's load it up again. Okay, so in this case, we're using the natural versus the mid. Okay, so the natural is 47.95 minus 47.15. Sorry, 47.95 minus 47.08, 87. So divide that by 47.8 and times 100, and that's 1.8, less than 3%. That will work as well. What does that mean? It means that this is liquid enough so that the trade will be easily executed. After all, we have 4 legs here, and so that somebody's trying to figure out if they can buy and sell those options quickly in a computer. And so we want to be able to make sure that they have that is liquid enough so they won't have any trouble selling it or buying it, and then we can execute our trade. Okay, so yeah, that sounds good. So all items checked. So let's open it. Now confirm and send, and all we need to know is how many am I gonna do? Well, if I do 2, that will be 10% of my account. So if I go multiple so that I can see my account, this 615, if I do 2 of them, I would go $9,446, which is 10% of my account, a little less than 10%. So yeah, I'm happy with that. I send it off and it will get done shortly. And then finally, WDA. And WDA, yeah, looks like a problem here. Let's go to the chart first. Yeah, the stock just jumped, the volatility dropped, that's good. The earnings, very wide margin, excellent. What does this company do, if you might be curious? So go to the Analyze tab and click on Fundamentals. It's not showing it because it's the paper trading account, but in your real account will tell you what the company does. Okay, let's go to the chart here. It doesn't really tell me anything. Now, let's suppose that you will look for that. Okay, make sure that you understand what the company does, because you're going to stick with this for a while. All right, and or you get live news as well, and see if there is anything particularly regarding earnings to justify the jump. We know that that's justified because it beat expectations by a very wide margin. Okay, so let's look at our trade here. Risk profile, and here I see 36.29, yeah, and the shorts are very much shorter. So let's go to our calculator again, clear the memory and clear it. So remember to look at here at the lower right corner of your screen, the volatility. So 36.41 plus 29.41, divide that by 2 and save it in memory, and then do the same for the short, 31.11 plus 26.43, divide that by 2 and subtract it from memory, and then recall, and it's 4%, so that's too much. Okay, so that's not going to work for us. If you are really motivated to enter this trade, make sure that at least 3 of those conditions is filled, meaning that the stock is down here, the IV percentile is really low, that the earnings were great, that the volatility in all your legs is below 40%, which they are, but the only thing that, the one other thing is when you create the duplicate, see the mid and the nut, that seems to be liquid enough. Okay, so 47, let's see, 49, yeah, that's definitely 49 minus 47.58 divided by 49, and that was my times 100. Yes, this will work. And the only thing that does not work for me is the difference, and that's sort of a deal breaker for me, because that means that my options that I'm buying are too expensive compared to the options that I'm selling, and that to me is important. Only if I really were motivated for some reason, I might consider this trade, but I'm not. Okay, so that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.